Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Cummins Inc. Annual Report. Cummins Inc. offers a wide range of power solutions worldwide through its 5 segments: engine, distribution, components, power systems, and etc. The company's product offerings include diesel and natural gas-powered engines, drivetrain systems, truck and trailer products, and other equipment. In addition to its engine and component sales, Cummins also provides various services including application engineering, custom-designed assemblies, in-shop and field-based repair services, and aftermarket parts retailing and wholesaling. The company's power generation solutions include standby and prime power generators, controls, paralleling systems, and transfer switches. Cummins' product portfolio also includes electrified power systems such as batteries, fuel cells, electric powertrain technologies, and hydrogen production technologies. Furthermore, the company offers turnkey solutions for distributed generation and energy management applications using natural gas, diesel, and alternative sustainable fuels. The company sells its products to original equipment manufacturers, distributors, dealers, and other customers worldwide. With a rich history dating back to 1919, Cummins Inc. has established itself as a leading provider of power solutions globally. The significant increase in Cummins Inc. stock price over the past year can be attributed to a combination of strong financial performance, strategic developments, and positive analyst sentiment. Cummins' robust operational results for the fourth quarter and full year 2025 were a major contributor to its stock price surge. The company's distribution and power systems segments achieved record sales and profitability, driven by strong demand for data center backup power. Additionally, Cummins provided an optimistic forecast for 2026, projecting revenue growth between 3% and 8%, and an EBITDA margin ranging from 17% to 18% of sales. The company's commitment to its shareholders was also evident through consistent dividend increases, with the 16th consecutive year of dividend hikes demonstrating financial stability. Furthermore, Cummins expanded its product line with the introduction of new engine platforms, including the B7.2 and X10 engines, as part of its Cummins HELMTM platforms. The acquisition of assets from First Mode, a leader in retrofit hybrid solutions for mining and rail operations, is also expected to drive growth and innovation. This strategic move aligns with Cummins' efforts to advance decarbonization and reduce the total cost of ownership in these sectors. Positive analyst sentiment and upgrades further contributed to the stock price increase. Several financial firms upgraded their outlook on Cummins, citing factors such as an attractive risk/reward profile and expected growth in the power segment. The company's record earnings and EBITDA in the fourth quarter of 2025 also highlighted efficient operations and profitability. Overall, Cummins' strong financial performance, strategic developments, and positive analyst sentiment have all contributed to its significant stock price increase over the past year. Cummins Inc. market capitalization of $81 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that Cummins Inc. holds a significant advantage in their industry. Cummins Inc. trades at a higher price-to-earnings ratio of 29 times and a higher price-to-book ratio of 6.58 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 64% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through a review of various segments and events within a company. In terms of revenue growth, the engine segment, components segment, and power systems segment all experienced significant increases in external sales, contributing to overall revenue growth. The Accelera segment also played a role in revenue growth, particularly in its early stages of commercializing electrified power systems. On the other hand, certain segments and events contributed to revenue decline. The Accelera segment saw a substantial decline in revenue, with a decrease of $443 million, minus 56%, compared to previous years. Additionally, the distribution segment experienced a minor decline of $0.632 million, minus 6%. Inventory write-downs, impairment of goodwill, contract termination costs, and severance also contributed to revenue decline. Notable events such as the divestiture of Atmos in 2024 generated a significant gain, contributing to revenue growth. However, a settlement agreement's charge in 2023 negatively impacted revenue. These factors highlight the importance of monitoring various segments and events within a company to understand the drivers of revenue growth or decline. The net income of Cummins experienced fluctuations between 2023 and 2025. In 2023, the company reported a net income of $339 million. However, this figure decreased by 12% in 2024 to $296 million. The following year, 2025, saw a significant increase of 23% from 2024, resulting in a net income of $364 million. The profit margins of Cummins subsidiaries also underwent changes during the same period. Chongqing Cummins Engine Company, Limited, witnessed an improvement in its profit margin by 9% in 2024 compared to 2023. However, this trend reversed in 2025 with a decrease of 3%. Dongfeng Cummins Engine Company, Limited, saw a slight increase of 3% in 2024 but returned to the same level as 2023 in 2025. Beijing Foton Cummins Engine Co., Limited, experienced an increase of 4% in its profit margin in 2025. The overall net income and profit margins change indicate that the company's financial performance improved in 2025 compared to 2024. The increase in net income was attributed to strong growth in power generation markets, favorable non-tariff pricing, and lower compensation expenses. The company's financial performance indicates a strong ability to generate cash from its core operations. According to the annual reports, the company has consistently produced positive operating cash flow over the past 2 years. In 2025, it generated $3.6 billion in cash from operations, while in 2023, it reported net cash provided by operating activities of $3.966 million. These figures demonstrate a stable and healthy financial position for the company. The company's debt level and interest expenses have undergone significant changes over the past year. According to the extracted summaries, long-term debt has increased substantially from $4,784 million in 2024 to $6,792 million in 2025. This increase is reflected in the total debt, which rose from $7,059 million in 2024 to $7,552 million in 2025. However, interest expenses have shown a mixed trend. While they decreased by $41 million in 2025 compared to 2024, there was a slight increase in interest expenses in 2025 compared to 2024 due to the settlement of interest rate swaps. This is evident from the significant changes section, which highlights that interest expenses related to interest rate swaps increased significantly in 2025 due to the settlement of swaps on 2025 debt. Overall, while the company's debt level has increased, its interest expenses have shown a mixed trend, with some decreases and increases depending on the specific context. The financial performance of the company varied across different segments and regions. On a positive note, the power systems segment saw a significant increase of 16%, driven by strong demand. The aftermarket business also performed well, remaining stable due to its reliance on engine and power systems businesses. In contrast, the component segment experienced a decline of 13%. The engine segment suffered as well, with heavy-duty truck sales decreasing from $3,320 million in 2024 to $2,544 million in 2025. Medium-duty truck and bus sales also declined. Geographically, China was a standout performer, with Chongqing Cummins Engine Company, Limited, and Dongfeng Cummins Engine Company, Limited, both seeing significant increases in revenue. India also performed well, with Tata Cummins Limited experiencing steady growth. However, North America experienced lower demand in heavy-duty and medium-duty truck markets. Beijing Foton Cummins Engine Co., Limited, saw a decline in revenue, while all other manufacturers reported a substantial decrease from 91 million in 2023 to 29 million in 2025. The company's outlook and strategy are centered around managing financial risk, diversification, and strategic investments. The diversified portfolio includes various asset classes, such as equity investees, debt securities, and derivatives, which are used for hedging purposes only to manage market risk. Supply chain financing programs with financial intermediaries have been implemented to improve cash flow. The company is also focused on increasing market penetration through joint ventures, prioritizing cost reduction and supply chain management. Investment strategy involves using net asset value, NAV, as an alternative to estimated fair value for certain investments due to lack of market prices. Debt management has been compliant with all financial debt covenants under borrowing agreements. In terms of specific areas of focus, the company is investing in long-term contracts, which are expected to generate significant revenue over the next 12 months and up to 10 years. The company's strategy also involves prioritizing cost reduction and supply chain management through joint ventures. Overall, the company appears to be taking a cautious approach to investments while managing financial risk and diversifying its portfolio. Acquisitions and divestitures. A summary of key transactions. The company has engaged in various acquisitions and divestitures over the years. In terms of acquisitions, there are limited details provided in the report. However, it is mentioned that additions to tax positions due to acquisitions were recorded in 2023, page 93. Additionally, pending trade/purchases/sales resulted in a -$1 million loss, page 102, and purchases of real assets and private markets investments totaled -$3 million in 2024, page 106. On the other hand, divestitures have been more significant. The company divested Atmos Filtration Technologies Inc. on March 18, 2024, pages 36 and 125. This transaction resulted in a non-taxable gain of $1.3 billion, page 92. Furthermore, Accelera's electrolyzer business was fully impaired, leading to a write-off of $240 million in the third quarter of 2025, page 49. The company also undertook strategic reorganization actions within its Accelera segment, which included consolidating manufacturing efforts and reducing investments in certain technologies and markets. These actions resulted in unfavorable adjustments of $50 million, pages 92 and 125. Overall, while acquisitions are limited, divestitures have been a significant aspect of the company's strategy. The company has a history of paying dividends to its shareholders. The total amount paid out as dividends has been steadily increasing over the years, with $1.1 billion paid in 2025, compared to $1 billion in 2024, and $0.9 billion in 2023. This indicates that the company is committed to returning value to its investors through dividend payments. In addition to paying out dividends, the company has also made significant share buybacks. The net effect of these transactions is a reduction in the number of outstanding shares, which can have a positive impact on earnings per share and stock price. Concerns about inventory buildup and supply chain disruption. There are valid concerns about inventory buildup and supply chain disruption in various aspects of the company's operations. The risk of supply chain disruptions exists in certain categories, which could negatively impact the ability to meet customer demand, pages 10-11. Uncertainty surrounding future trade relationships and tariffs poses a significant threat to global supply chains, page 18. Climate change may cause disruptions to operations, including manufacturing, distribution, and supply chain, page 22. The reduced global movement of goods has led to increased costs for suppliers and end users due to tariffs, further exacerbating the uncertainty around availability of supply, page 36. Inventory write-downs have been significant, totaling $157 million in 2025 and $112 million in 2024, pages 41-95. The company's inventory turnover rate has decreased from 4.4 in 2024 to 4.2 in 2025, indicating a buildup of inventory, page 51. Purchase commitments for inventory have increased to $989 million, with long-term commitments totaling $20 million, page 55. Physical forward contracts may indicate potential for inventory buildup, page 78. While there are concerns about supply chain disruptions due to tariffs and trade disruptions, embargoes, sanctions and export controls, climate change, and natural disasters, the company must address these issues to mitigate risks and ensure a stable supply chain. That concludes the financial summary for Cummins Inc. Feel free to comment below, and I will be happy to answer them when possible.